Hi everyone, today we will learn more about accounting equation. In accounting equation, you need to know about assets, liabilities, and owner's equity. Firstly, you must know about the meaning of accounting equation. Accounting equation is the foundation for the double-entry bookkeeping system. In accounting equation, you need to know about assets, liabilities, and owner's equity. We can express the relationship of that as an equation. This is the equation which is assets equals to liabilities plus owner's equity. So, before you know more about assets, liabilities and owner's equity, you must understand about basic accounting equation. Let's look this note. Firstly, assets is what is your own. Secondly, liabilities. Liabilities is what your own. Lastly, owner's equity. Owner's equity is what is left over. Now let's learn more about assets. Assets, as we know, assets is resources of business own. Other than that, assets also provide future services and benefits. For example of assets is cash, supplies, equipment and account receivable. Next, let's learn more about liabilities. So now we will talk about liabilities. As we know, liabilities is claims against assets, which is debts and obligation. Liabilities also known as creditors, which mean party to whom money is owned. For example is account payable and note payable. Lastly, about owner's equity. Owner's equity. Actually, owner's equity mean ownership claim to total assets. And owner's equity also referred as residual equity. For example, owner's is capital, owner's drawing, revenues and expenses. Now let's see what component that make owner's equity increase and decrease. Component that make owner's equity increase is investment by own and revenues. Investments by owner are the assets the owner puts into the business. These investments increase owner's equity. They are recorded in a category called owner's capital. Next, I will talk about revenues. Revenues are the gross increase in owner's equity resulting from business activities entered into for the purpose of earning income. Generally, revenues result from selling merchandise, performing services, renting property, and lending money. What can make owner's equity decreases? Do you know? I will tell you. For your information, in a proprietorship, owner's drawings and expenses decrease owner's equity. Drawings is when an owner may withdraw cash or other assets for personal use. We use a separate classification called drawings to determine the total withdrawals for each accounting period. Drawings decrease owner's equity. They are recorded in a category called owner's equity. Expenses are cost of assets consumed or services used in the process of earning revenue. They are decrease in owner's equity that result from operating the business. For example, rent expense, advertising expense and so on. So, from all information about owner's equity, we can conclude the way to get owner's equity is owner's capital minus owner's drawing plus revenues and minus expenses.
Created using Powtoon.